Hi, my name is Ryan Gray and welcome to GreyTrading Economics and Finance. In this final video of backtesting, we're going to be going over risk analysis of the whole strategy. So this is the video where we've completed all of the backtests. There are separate videos covering each currency for 2022 to 2023. So here we have plotted out each trade by trade, for the different currencies. At the top, you'll see how much percentage each currency did. Each currency, and including commodity gold, did give a positive result. We had a variance between 35% and 6%. I would say on average, let's just quickly work out what the average is. So the average, do in a different color. So our average, do you think it is? I'd say it's about 25%. Yeah, 25%. So gave an average of 25% and we traded eight assets. You can take this further if you wanted to. So you could trade minors like Euro GBP, Euro AUD, Euro NZD, basically all the other combinations apart from against the dollar. So these would be known as minors. You can even trade exotics with if you want. If you want to go further, you could go cryptocurrencies, blue chip equities like Facebook, Amazon, big household names like that. But this video just covers trading FX. It delivers a total of 200%. That 200% can be compounded. So let's have a look now at these very small gains on the Forex market and we'll look at how we can trade this. Okay, so we've got three types of graph for three types of risk of trader. The first trader risks 1% per trade. So say you had a £10,000 account. We'll look at the end of the video. I'll show you the lot size of a different the lot size that you would be required to do each of these trade brackets, just so you can be familiar, if you're familiar with trading, and how much that would be. So we'll do a quick recap of lot size to account size at the end, just so you can make it really easy to understand. But to summarize, 1% gave you almost a 700% gain. Risking 2% per trade gives you almost 4,000%, and 3% per trade gives you staggering almost 20,000% in 1 year. So these results are very, very smooth results, and to be honest, even the 2% one isn't that risky. So we can look at the graphs here. So this is the 1% starting with 10 grand, getting to over 50 grand, again about 66 grand. On the second 2% one, we're getting close to £500,000, and on the third one, we're getting well over £1 million. We're going towards 2 million. Okay, so that's how the risk breakdown of this all works. We've already gone over the equity curves of each graph, so just flick you through these if you want to have a look at them. So you've seen them all, and the portfolio of them added together, just again, it is really eye-watering stuff. And we've backtested it all for you in these 8 videos. So it's a reliable backtest. You can go further. You can backtest it going back to 2000, but when you're getting results like this, you're able to turn 10 grand into almost £1 million in 2 years. So that's obviously extending these results for 2 years, but you well could do that if you wanted to. You can trade this strategy alongside a job. It's easy to do. It requires like 1 minute a day of your time, and it's very easy to do. Even if you just held a 10 grand in the bank account, it would be suffer from maybe a 10%, 20% movement per year just because you left it in the bank. So even if you sit on it, you're going to be suspect to a 1% trade. 2% trade is not that risky, 3% trade is not that risky either. So anyway, as I briefly said, we're now going to look at the lot sizes that would be required to risk 1% per trade on each of these currencies. So I'm just going to pause the video here and then we're going to go over that. Okay, so welcome back. I've just opened up MT4, which is MetaTrader 4, and I've got two algorithms here. These are the most simple of algorithms that you'll ever see, but they are very useful. So we're going to begin by risking 1% per trade. The stop loss is also already added on, and it's at 1%. So I'm just going to show you how much you'd have to risk. We'll begin on, let's say, the 19th of January. That looks quite a low volatility day. And we're just going to look at the lot size that the algorithm uses. With, let's say, a 10 grand account, we'll use £10,000. So you'll see a 1% trade, and this is the exact lot size that you would need for AUD USD. Okay, so let's take a look. That's £10,000 account. This is 0.17. Okay, so I'm just gonna do a lot size account. In fact, I'll pause the video here and I'll just fill all this out, but you'll be able to see after. Okay, so I'm all finished up now calculating the lot sizes. So let's just go over some different things that you can easily see from this. So the first thing is this is an account size of £10,000, that's sterling, and other people around the world might be using dollars, that is United States dollars. So these are the two to be in comparison. So if it's in sterling, it tends to be slightly higher lot size because that's just a higher USD amount as well. And some people might be thinking, I don't have £10,000 or something, or $10,000, so they want to be starting with a smaller account size. So these are the lots that you would use under a smaller account size, 1%, 2%, 3%. And then if you've got somewhere in the middle, 2.5 grand maybe, or 5 grand, you can easily calculate these from those results. So this is all the lot sizes that's required to trade this strategy. This is done for MetaTrader 4, and you can just have a glance at that and see if you're comfortable with these lot sizes. I'm suggesting we use this middle column. So if these seem reasonable to you, these actually seem a bit low. On a £1,000 is easy to sort of understand. Most people have traded over £1,000. Would you risk 0.02? You probably would, wouldn't you? You'd probably risk more. You'd probably risk even more than the 3% one. So I think most people are probably on £1,000. They'd risk more than the 3% one. They're probably risking 0.1, 0.2 on most trades. So they're well into the sort of 6-7% range. You don't need to use as much as that, as we've already analysed. On this strategy, we can make 18,000% using 3% per trade over a year. So I think that speaks for itself. The 3% one seems reasonable, and the 2% one seems reasonable as well. So I wish you good luck with your trading this year in 2023, and I hope you choose GreyTrading to join the club, whether you're joining the Smart Ape Trader Club or you're thinking of just joining GreyTrading and going with a slightly higher price, but still joining. So that concludes the video, and I hope you enjoyed watching.